a finance geek and a self-proclaimed foodie, and today's video is about the 5 stocks I'm looking out to invest in the month of May. So before I tell you about the 5 stocks to invest in, you need to know that the current stock market uptrend is under a lot of pressure amid a number of recent distribution days. Now is not the best time for an investor to make investments unless there are some exceptional stocks out there. I'm currently recommending a 20 to 40% market exposure only. At this time, you should definitely stay on top of your market portfolio to decide if it's a sell signal or a buy signal. Because of this, we're also going to consider the RSI indicator to decide if it's a buy or a sell and at what price we should buy it. For those of you who don't know, Relative Strength Indicator or RSI is a momentum indicator that measures the magnitude of recent price changes to analyze overbought and oversold conditions. So the first stock on the list is Intel. We all know about the company, it's been around for years. In case you don't, I'll be linking some company information in the caption below, make sure you check it out. On April 9, the company unveiled its latest AI chip, Gaudi 3, and claimed that it can deploy big AI models such as the one underpinning OpenAI's ChatGPT. It also claims that its chip uses less power than the ones of Nvidia. The new chips will be available in the third quarter of this year. Companies like Dell, HP and Supermicro will be building enterprises using these chips. I've already done an analysis on Supermicro, so you know how big it can be. And if Supermicro is going to be using Intel's chips, then it's definitely a long-term multi-bagger. Intel is also teaming up with other chip and software giants like Google, Qualcomm and ARM to build open software that isn't proprietary and could enable software companies to easily switch chip providers. So recently, Gartner conducted an extensive study and predicts that worldwide shipments of AI PCs and Gen AI smartphones to total 295 million units in 2024. Intel recently got a federal grant amount of $8.5 billion. The anticipated investment from the company itself is going to be $100 billion to construct new fabs in Arizona and Ohio. The PE ratio is currently 33.46, which is much cheaper than its competitors like Nvidia at 74.9, Lam Research at 37.4, AMD at a whooping 341.5, and Broadcom at 49.5. The RSI has been below 50 since April 2nd, so now is a really good time to buy the stock. The second one on the list is Eli Lilly stock. Now Eli Lilly ranks the first in the competitive medical diversified space. Both Lilly's and Viking's treatment block hormones called GLP-1 and GIP to slow down how fast the stomach empties itself and improve feelings of fullness. Vikings is facing a lot of stiff competition from Lilly and NVO. Both sell approved weight loss injections and are working on pills. Analysts surveyed by FactSet expect the duo to bring in a combined $12.48 billion in sales this year, growing to $37.72 billion in 2029. Among potential offerings that have excited investors is a gene therapy that could restore hearing loss as well. The RSI has been fluctuating for quite a bit, so definitely wait till it's in the 40s to buy it. The third one on my list is ServiceNow. The enterprise software play ServiceNow is definitely one to watch out for after it formed a new flat base of an ideal entry point of $715. The stock is now trying to find support near its 50-day moving average. The enterprise software maker said it expects its full year 2024 subscription revenue in a range of $10.56 billion to $10.57 billion versus the original consensus of $10.59 billion. This is why the stock dipped a little bit after announcing its results, and I think it's a great entry point. ServiceNow software tracks and manages information provided by information technology departments. Also, its self-service tech portal enables company employees to access administrative and workflow tools. The firm has been adding new products and it's expanding its core business into software for human resources, customer service management, and security. The company also booked 8 transactions for more than $5 million in an annual contract value, doubling from the quarter a year ago, thus showcasing that it's attracting more large contracts and larger customers. Now, Nvidia and Hugging Face released Star Coder 2, a family of open access LLMs for code generation. Now is the first platform provider to access Nvidia NIM interface microservices for LLM development. In simple terms, you can build applications quickly using the model's capabilities, including code completing, autofill, and advanced code summarization. The RSI again has been fluctuating quite a bit, so do check when it's in its late 30s and early 40s and purchase the stock then. The fourth one on my list is Google. Now everyone's talking about Google after their latest dividend announcement, and so do not buy the stock now, but let's track it. Google introduced its most advanced artificial intelligence model, a technology capable of crunching different forms of information such as video, audio and text. It's called Gemini. And the Google owner's highly anticipated AI model is capable of more sophisticated reasoning and understanding information with a greater degree of nuance than Google's prior technology. The Microsoft stock has surged for over 75% since announcing its game-changing deal with ChatGPT developer OpenAI in early 2024. And so if Google gets Gemini right, there's a huge potential. Because of the dividend announcement, the RSI is much above 50, so I definitely recommend waiting it out till it's at the 40s and then purchasing the stock. The company has also been doing phenomenally in terms of its financial numbers. The last one on my list is something you wouldn't have even thought of, but it's LVMH. For those of you who don't know, LVMH doesn't only own Moet, Hennessy and LV, Louis Vuitton, the brand, but they also own Sephora, Fenty, and they just purchased Kiko Milano. They own Bulgari, Dior, PVR Cinema, Jones the Grocer, Fab India, Charles & Keith, and many more. It's one company that is recession proof, and I'll link an article below to explain why it is recession proof as well in detail. But essentially, Bernard, the CEO of LVMH, spoke about potential acquisitions and said that he's not looking for brands that are hot right now, but he's looking for a brand that he thinks can be here in 100 years from now. He's focused on building a recession-proof business because of all his acquisitions. And because of this strategy, the company is 100% investable and will be doing well for the next 100 years. Hermes quarterly sales also recently jumped up by 17% due to its strong China demand. So this just goes to showcase that all the brands under the LVMH umbrella are doing well, and even if they're not, there are so many brands under the umbrella that overall when you keep it in your portfolio, it is going to grow. The RSI has been fluctuating for quite a bit now given the market conditions, but I would recommend buying it anytime when it's in the range of 30 to 40. If you want to know where I'm checking the RSI, check the caption. The website is called TradingView and you can just get a free account for yourself. If you have any questions about investing, personal finance, the US stock markets, or how to invest in US stock markets while you're living in Dubai, make sure you ask me in the comments, and don't forget to subscribe to my channel. Bye.